Okay, thank you so much for coming. I know it's very early. It is the last day in Davos, and many had a long night. And so let's instill a little bit of energy into this kind of lazy morning here, because we have the most important task in front of us. Please take a seat. The ones who are still here, you can still keep on munching here with your sandwiches. Welcome to the most important day for us, actually, is the Caspian Day. Because after all, please, yeah. You have any thank you. Because we have a conflict with the microphone otherwise. We are building the Caspian Week with the goal to discover future technologies, better solutions and approaches to business, and solutions to challenge socioeconomic situations globally. For that reason, the Caspian Week has the aim to bring decision makers together to make our world better for all and to pay the Caspian region particular attention in the process. This year's motto is Finis Origine, pendet. The outcome depends upon the beginning. This old Latin proverb can't be better applied than to the Caspian region in general. The Caspian region is at the crossroads of many worlds. From east to west, it is connected via a chain of trading and logistic hubs originally called the Silk Road, which is now being reborn. From north to south, it portrays the most important energy and commodity corridor in the world. The Caspian region itself is the cradle of energy, supplying both East and Europe reliably with gas and oil for a long time. Historically, the region, as seen on the beautiful movie that was going on every day here, is the origin of the oil industry. Today, we know about the Rothschild financiers, the banks. We know about the Nobel Prize from the Nobel brothers in Sweden, and the structured finance for infrastructure, which has been originally developed by the Deutsche Bank. Today also we take oil refineries that provide us with many convenient materials and transport fuel for granted. We look at the oil tankers and pipelines as things that are normal, but few know about the origin of these, which lay all in the Caspian region, particularly in Azerbaijan, in Baku, but also in Iran, in Turkmenistan, and in Russia. The Caspian region is the cradle of many things when we look back. And we need to look back in order to look forward, which we are doing in the Caspian Week. We dedicate our energy and collective intelligence to reach out to all in order to collaborate, to add value to the socio-economic fabric locally. Our focus is to leverage digital technologies for improving the commercial nexus east-west and north-south. For that reason, we are very privileged to have assembled key players today from the industry and policymakers from the local authorities. I would like to welcome the panel now on stage, starting with Kairat, the governor of the Astana International Financial Corporation, Center, sorry. Please, yes, please welcome Kairat. He came all the way from Kazakhstan. Kairat is probably the most important engaged individual, I would say, that I know from the region in terms of trying to find solutions for the commercial improvement of the regional hub. So thank you so much for coming. Kairat has a long pedigree of global financial involvement. He has been, you will give a short background afterwards, but involved from Washington, D.C., studied in the UK, in the United States, also in Switzerland, some things. And we share a lot of common friends together, actually. I studied with two of your colleagues and collaborate a lot with Danny Heller, who was also on the panel on Thursday, who was the managing director of the IMF for Kazakhstan, among other things. So there's a lot of nexus between Switzerland, Washington, D.C. and Kazakhstan itself. So thank you so much for coming all the way. Then we have Nothing will work, and this panel is dedicated to really look from top down. We are not going into technical details today, but nothing will work in international collaboration if we do not collaborate globally in order for having agreement and standards to exchange values and goods. For that reason, we're very privileged to have here Matthew Schwartz from New York. Matthew, where are you? Oh, here. Sorry, just grab a drink because he's dehydrated from a long flight. Please welcome Matthew. Matthew has been very engaged from a legal perspective on a global scale, how to reach standards on the blockchain. And without standards, blockchains will bump into the digital borders, the legal borders, and the sovereign borders. And nothing will happen without having agreements among the different sovereign realities and legal realities. Also, I would like to welcome from a commercial standpoint, Boris Eicher. Boris is coming from the industrial side. Boris has been in the commodity trading industry for a long time, his entire life. And he's one of the most intransparent commercial activities is to trade and transport commodity concentrates. Concentrates means these are metals which have been extracted and partially refined, and they're like a soup. You have to imagine this is a soup that you don't see much when you look from outside. This is a soup of metals and liquids which you transport and then separate into individual pieces. It's called metal concentrates. And it's very difficult to value those soups before they are being separated. So a lot of intransparent business activities are going on, and a lot of value is being lost doing so. And Boris has developed for the first time a blockchain-based and trying to render the soup transparent so that you can dedicate a chain of logic evolutions where the soup is coming from in order to improve the commercial trade and the quality of the products from the seller to the buyer. Welcome, Boris. Now, very important is when you talk about commercial transactions, is transporting goods in exchange for a value, monetary value or others. That has mostly to do with a contract. And the contract is mostly to do based on English law for a long time. 90% of the global commodity trades are performed in English law for many different reasons. So the English have, or London particularly, has an extremely important function in order to make our world trade fluid. Now, rendering the whole transportation nodes and commodity trade logic digital is extremely complex in many ways. And a lot has to do with the contractual obligation of the different transacting parties. We hear a lot about smart contracts. Smart contracts are contracts which is when something happens, certain criteria have been met, an automatic transaction is being released, monetary or others. That sounds very easy and logic. Why not to do? Because digitally, that's quite easy to program. Legally, it's extremely complicated because there are a lot of aspects which cannot automatically be released if something else is met. Fenwick Holman is the leading commodity trade law firm based in London and many other countries, and you're very privileged to have the head who is occupying himself with the smart contract issue here from London, Philip Prowse. Please welcome Philip. I would like to start that each one introduces himself and says what is your occupation, and particularly in terms of the digital impact in your segment. And I would like to give ample and a lot of time to Governor Khairat, because he has to leave a little bit early. The flight is taking you back to Kazakhstan. I guess it's not cold enough here anymore for you. The sun coming out. So please, Khairat, I would like that you open the floor, and I thank you very much for being here.
Yeah. Good morning, ladies and gentlemen. Thank you very much, Kaspar, for such a kind introduction. I'm governor of Astana International Financial Center. It's an initiative of President Nazarbayev in Kazakhstan. Very similar, for those of you who know very well the experience which was done recently in Middle East, like DAFC, Dubai International Financial Center, or Abu Dhabi Global Markets Authority, or Qatar Financial Center, and many, many others. So the idea was to bring the jurisdiction of English common law to the area where traditionally it wasn't, let's say, such approach in a legal system. The decision was done 3 years before, so those time I used to be governor of Central Bank of Kazakhstan, and many of you know me like a CEO of Sovereign Wealth Fund Samruk Kazina. So all of this experience give me great opportunities to know the financial landscape in the region, The idea is now to build a regional financial services hub. People ask me, what do you mean by region? And here I would like just to give 3 dimensions, which is, I think, very important to understand. So first of all, we are part of Eurasian Economic Union. You know that the 5 countries like Russia, Kazakhstan, Belarus, Kyrgyzstan, and Armenia creates a common market, 170 million people. So this is post-Soviet Union area traditionally. The second one is dimension is Central Asia in broader terms, including, let's say, Caspian dimension. So here probably more representation from the Caspian side, like Georgia, Azerbaijan, Iran, and Turkmenistan, but people should know that also the dimension of Central Asia, where 5 countries like Kazakhstan, Uzbekistan, Kyrgyzstan, Turkmenistan, and Tajikistan is also kind of big community market of 60 million people. But in broader terms, is in one dimension Caspian, in the other dimension is Mongolia and western part of China. So this is area very rich of natural resources. That's why I think that it's very important to have a really good hub. In Astana, if you take around area for more than around 2,000 kilometers, so there is no any particularly global business hub which is covered us. So we previously was from London, from Frankfurt, from Dubai, from Istanbul, from Moscow, and now we create the own regional financial services hub. Again, with, to my mind, kind of a game changer was when we bring the jurisdiction of English common law. What does it mean? It means that there is a certain area, so half of the city of Astana, where the rules of English common law already been implemented. In order to deliver it, it was amendments to the constitution, a special constitutional law in AFC, and 50 laws which is bring together all the financial services rules and standards. We create own regulation authorities, very similar to the approach of monetary authorities of Singapore, with the sandbox, with the idea that the regulation authority, from one side, should be prudent enough. It shouldn't be any kind of concerns that is like the new area or the new offshore zone, like which create different scandals like Panama Papers. Not, we are focusing on the Singaporean approach, be prudent, to have very strong regulation from one side, but from the other side, the regulation should be smart. And we've seen from the experience of financial conducting authorities in London or MAS in Singapore, this is like a pro-business, pro-development regulation, and I think that this is very much important. We also create new stock exchange empowering by the technology of NASDAQ, and one of the key shareholders of us is the Shanghai Stock Exchange. This is the dimension number 3, which the people probably know like Belt and Road, or we call it like restoring ancient Silk Road. And if you remember, historically, I would like just to remind you, between 9th and 12th century, 400 years, Central Asia was a global financial center. The people know such cities like Bukhara, Samarkand, Taraz, Shymkent, and Turkestan, which have been really part of the global trade network. And for example, the age of Samarkand is 3,000 years. It's like ancient Rome. And this was the area where it was first financial transaction, and now we want to restore it. So in other words, our famous joke, now let's do Silk Road great again. So this is the idea actually, and one of the attempts we started in Kazakhstan. AFC started to work since January 1st, but I would like to use these opportunities to invite all of you to the Astana Finance Week, where we will be official international presentation of Astana International Financial Center in July 5th this year. So the idea again, to create financial center, what to do is repeat the experience what was done in London in 80s, or in New York in 90s, or in Dubai in 2000s. I think that now the world is changing very dramatically, especially for the country who are rich on commodities. Now we understand that maybe the era of the high price for oil is over. But Kazakhstan is not just about oil or gas. Kazakhstan is like Australia and Canada, very rich on other commodities. We are in top 3 in terms of the uranium. We have all the metals, and mining is very, in traditional understanding of mining, is very developed area for development. But now the idea is really to use the Silk Road, to Belt and Road Initiative for connectivity, to connect Eurasia, connect China, connect Eastern Europe, connect Middle East together. And how to connect it? So you need to bring the clear rules of the game. What is it like? And I think that this reform, which is towards the rule of law in Kazakhstan, is very much important. Protecting the intellectual property, bringing all the international standards from one side, and from the other side, be a marketplace which has supported new technologies. And I think the new revolution, which is now a digital revolution, including the new technologies like artificial intelligence, blockchains, is very much, we are very much committed to implement, not just implement, but to use the recent experience which was done in Eastern Africa, in Kenya, with M-Pesa, with WeChat in China, to leapfrog to new destination. And I think that AAFC can be such a marketplace, can be kind of a center of expertise and benchmark for the entire region. Again, we wouldn't like to consider this like just a competition with someone. Competition is something to divide existing pie. I think that the philosophy should be different. It's not just to divide the existing pie. It's really through connectivity, through creating new value added to increase the pie. And I think that there is a place for the future financial centers in the region. We expect that we will be great financial centers in Moscow, in St. Petersburg, in Kazan, in Tashkent, in Baku, and in Georgia. So altogether, it's really kind of the philosophy of the ancient Silk Road, to connect city by city and to be contributing and to be part of the global economy. So let me stop here.
Thank you so much. Maybe one brief question you mentioned, so the focus is to really, as you say, to increase the pie. And I think in the physical world, that's quite difficult with the territorial limitations, and you have assets which have been demarked and so on. But in the digital world, that becomes very realistic, because the pie is global. And so connecting your physical pie, let's say, to the global digital pie is a huge opportunity for the entire region. How would you address, how do you address it, besides the Astana International Financial Center, applying those technologies? You mentioned you try to take the best from the West and connect it with the East. You had the Shanghai Stock Exchange being invested in Astana International, what is it called, the Astana Stock Exchange? Actually.
Yes, Astana International Exchange.
Exchange, technology from NASDAQ, you apply different technologies. With what kind of companies do you collaborate in order to leverage those opportunities to connect the physical with the digital world?
Yes, what we're watching now is like, what is the financial services now? Financial services, by the way, is the 5 pillars which we would like to develop in AAFC's traditional asset management, private wealth management, Islamic finance, capital markets, and fintech. And I think when we're thinking about the new financial center, new generation of the financial center, is more about the new understanding of certain pillars, including the fintech. Fintech is a very someone call it like disruptive technologies, so let's divide it. Some technologies can be part of the traditional financial services, but some can change the financial landscape. So we are looking for what's going on, like Google, Amazon, Alibaba. So I think that they would be the more, let's say, providing services to the population rather than traditional banking institutions. And we see that all the banking institutions, what is going on now with ING in Europe or with Sberbank in Russia, they are now more IT companies rather than just traditional lending institutions. So, and we believe that we can be really kind of the center of coordination of the digital Belt and Road, digital Silk Road, let's say. So we're working very closely with companies like Alibaba, like Tencent in China. So we brought the Shanghai Stock Exchange. We believe that all the Chinese financial institutions like China Development Bank, new established AAB, from this side of the world. But from the other side, I think we believe that we're working very close with American and European companies. So we've met with a number of them here. The companies like Consensus from one side, or companies which are based in Russia like Sberbank, like Yandex. They're all very much keen to come and to try. I think that, and we are a great place, great marketplace to testify the technologies and then to scale it globally. So this is our idea, is actually, and we have around us. So we The idea is actually like, if we're thinking about like an example of United States, they have a East Coast and West Coast. So we want to bring East and West Coast both in a city of Astana, because we have around us the best university in Kazakhstan, Nazarbayev University. We have the International IT Startup Hub. So we're very much focused on all the stages of the financial acceleration, center of the blockchain technologies, also the sandbox. And all of these ingredients, to my mind, allow us to create opportunities. And what I would like just to send a message to the people here, I know that many people have a lot of linkages and roots from the Caspian region and from Central Asia. So the Astana International Financial Center is not just center for Kazakhstan. It's in 20 years, we would like to be in top 30 global financial center, but in 10 years, we want to be regional financial center. So this is center for all the people from the region who have to come. So we simplify life in terms of visa, taxation, regulation for anyone who wants to work. And we believe that this can be really outsourced financial services center for the rest of the world based on the human capital. We have very good human capital in the post-Soviet Union area, when we believe that we can use it right way.
Thank you so much. So human capital you put at the center and not the digital. I like this very much, but at the end it's based on us, not a digital world. Thank you so much.
Thank you.
Thank you so much. Maybe going, oh, you're going to leave already? What time is it? We have, sorry. No, you have another 10 minutes.
5 minutes? Okay.
5 minutes, please. I'm not letting you go just yet. You have to do a little bit more commercial talk. So briefly, please, now I looked like you already addressed the global issue, but from a local perspective. Now, looking at the local perspective from a global issue and the complexity, what it means in order to install and make all that work, the beautiful technology from all over the world. Matthew, I would like to give you the chance to introduce yourself and say what it means and what it requires in order to make that all work from a legal and global policy standpoint.
I'm happy to do that, although if the governor only has 5 minutes, maybe you have one more question for him. So my name is Matthew Schwartz. I'm a lawyer in New York, concentrating, as Caspar says, on regulatory issues in the fintech and financial space. Really, I bridge the divide between governments and companies, and sometimes the other way around. My background was I spent a decade as an official in the U.S. Department of Justice, first under the George W. Bush administration, and then for the first 6 years of the Barack Obama administration. And I've taken that experience dealing with essentially law enforcement matters and have applied it to helping clients, companies, investors, financial institutions in regulatory issues, because especially in the fintech space, where the regulation has not sorted itself out yet, a lot of the policy making is being done through law enforcement, because we to the governor's point, there are not clear standards, let alone clear international standards in this space, but what there are clear examples of bad conduct or conduct that governments and regulators want to deter, and that tends to be in emerging industries the leading edge of how rules are made. And so that's how I got into this, and now as the industry begins to mature a little bit and rulemaking is catching up to the enforcement, there's really an opportunity to be part of a dialogue to create the sort of standards that Caspar was talking about. And when I think about regulation in the fintech space, we're really talking about to my mind, four different kinds of issues that governments and regulators care about. One, which is by definition local, is tax regulation, right? There's a tremendous amount of business that is being done through new technologies that's not getting captured for taxation purposes. Governments care about that a great deal for obvious reasons, and a lot of regulation is going to ensure that those transactions are captured. But that's necessarily local. Everything else can be standardized across borders, and that is anti-money laundering, sanctions compliance, sort of knowing who's involved in transactions kind of regulation, 2. 3 is anti-fraud regulation, which is something that we see an incredible focus on right now as there's real frothiness in some of the fintech space, like especially around Bitcoin right now. As that is the flavor of the moment, there's tremendous opportunity for fraud and misconduct in those businesses, and so regulators are cracking down. And you see that coming out of governments all over the world. The United States has focused on it. The SEC in particular has just issued guidance about this. The South Korean financial regulator just earlier this week talked about cracking down on fraud in this space. I mean, it's an issue of international concern. And then the final area of regulation is what I call prudential regulation. This is sort of the work that securities or bank regulators do, just making sure that the rules of the game are well established. And that's something that we're just beginning to get into, because especially in some of these emerging technologies like blockchain, we don't even know who it is. We don't even know who the right regulator is, right? Depending in the United States, for example, depending upon who you ask, a Bitcoin is either a unit of currency, or it's a commodity, or it's a security, or it's something else. And just, on a napkin walking in here, I tried to make a list, just in the United States, of the different regulatory agencies that have claimed jurisdiction over this space, and I counted to 10 off the top of my head. And they all conflict with one another, right? It's a land grab amongst regulators. And that creates enormous difficulties for business trying to figure out what the rules of the road are. And so, having opportunities across borders to come together and talk about international standard setting is going to be absolutely essential for allowing this business to flourish.
Thank you so much. Thank you so much, Matthew. We come back to that substantially later. For Kairat, I would like to summarize in one simple sentence your message. The goal of you and the Astana International Financial Center of Kazakhstan is to leverage the human capital by simplifying life, by applying new technology for improving commerce in the broader Caspian region. I thank you so much you come all the way. Please a big applause to Kairat.
Thank you. If you don't mind, I just would like to add what just Matthew said, and I'm just echo to him. So actually, the regulation is very much important stuff. So there are 2 approaches on regulation. So one is when the regulators really try to understand what's going on and how to avoid any risk and how to protect consumers and how to protect population from, how to protect, let's say, the business community from the fraud. And from the other side, there is approach like to ignore and to prohibit it everything. So I think that this is kind of the dilemma between over-regulation and between prohibiting everything. And I think the smart approach to be somewhere in between, what is actually traditionally doing by the kind of best regulation authorities, like FCA, like FINMA in Switzerland, like monetary authorities of Singapore. Because we now understand that it's a global shifting in technologies. Is there any way that the people doesn't like the previous understanding of the traditional financial services? They want to get more affordable, more convenient way. And I think the fintech playing is a significant role of this. And I think that this is very much important, that it should be prudent, and we should all understand how all the standards of know your clients, anti-money laundering are implemented. And the regulation authorities should cross-border understand each other. And from the other side, how to describe what's going on, what is blockchain, what is token, how to put it in the legislation, how to work with it. And I think now everybody watching each other. Just we've seen, like, if you see any news every day, in one country, good news for new technologies, afternoon, bad news. That it's prohibited, now it's allowed. It prohibited, allowed. It's like race now everywhere. But what we understand now is that, and what is the people from the financial technologies and the digital technology understand, they need regulation. They come to us and say, we need regulation. We want to be legal. We want to operate in a legal area. Otherwise, if you are not following all these standards, you can block the, like, let's say, in a second. And now I think that is very good. If we, for example, what is ICO? How to describe ICO? How to regulate ICO? We should bring something which is clear for everybody. If we will tell, for example, that ICO is something like, should be regulated like certain stage of the private placement, how the private placement regulated by SEC, then it's clear for everybody, okay, this is the responsibility, and how to avoid the fraud, what is kind of responsibility to any players. So this is the approach that we choose. We're working very closely with financial regulation authorities in Switzerland, in London, in Singapore, in Dubai, and I think that this common understanding should help. But definitely, the winners takes it all, and the top 10 countries, which would be first in right understanding of regulation of new technologies, will get significant share of the bigger pie. So thank you very much again, and I'm really enjoying this discussion. Thank you.
Thank you, Kaivan. I would like to continue with now a practical aspect and what it means to install this technology in the real commercial world. Please, Boris.
Thank you. First of all, Caspar, thank you very much for organizing such a great event. And I actually want to follow up first on the discussion that started and follow on what Governor said. And I'll take the practical example out of life. We actually live and work in Zug. It's a village of 30,000 people. And the village of 30,000 people right now is one of the key hotspots for the ICO, token generating events, for blockchain community, for a very simple reason. They try to make the regulation friendly for the business. And I think that's exactly what Governor was referring to. And that's the key issue, right? For example, we look from the United States with the 10 agencies, they're over-regulating each other, right? It becomes a big machine. There are a lot of laws were written 100 years ago. They're conflicting. It's a big part of the tax code. Changes are very, very difficult to do. What do the American companies do? They leave United States officially, set up the foundation in the village of 30,000 people in Zug. Obviously, they do a lot of business with the United States. It's the biggest financial center in the world still. But nevertheless, it's actually amazing the number of the companies that you see. And I think that creates a great opportunities for multiple countries, and I'm very impressed that Kazakhstan has taken the initiative and trying to do that. Nobody understands what they're doing in the space, right? That's the beauty. So whoever comes first and actually puts the real effort into that will be one of the winners, right? And Karat has correctly mentioned winner takes all in a lot of things. We see that with multiple online platforms, right? It's very important to be the first one and build up the momentum. And I think that's exactly comes to the regulation as well. So it's not necessarily the only one winner, but there will be only several winners that will truly capture the value. And there is no way it will be the United States. It's just not possible.
But Boris, right? Boris, does the winner takes it all or the first mover takes it all? Is this the same?
No. But if you are the first mover, then your chances to be that winner are higher.
Is this the case? How many companies of the 2000-year tech bubble are still here today and are leading?
With the environment, the ecosystem builds on itself, right? When you are at the beginning and there are multiple things that come around, none of us understand how exactly it will develop, right? So the blockchain is everybody's saying the word blockchain, right? But there are very few real examples where it adds value yet, significant value. But you can clearly see that once the companies start, the ecosystem creates and multiple things come out of there. And so when you are at the start, you actually have a much better chances.
It's like the network effect will feed on itself.
Correct.
Once the ball starts rolling.
Absolutely. And it's a very well-connected world, right? It's a digital world. So everybody talks to everybody, right? It's actually amazing when you see the people who are, for example, who are involved in blockchain community, literally 50%, there is 1 degree of separation. You can reach out to almost anybody through one person.
Now, everybody is connected to everybody. Now, let's go down to the dirty soup, which is your main occupation. I would like to learn a little bit something, a real application of the technology, a very practical issue and a very difficult also topic to address, which is metal concentrates, and metal concentrate, the commodity. Quickly, some numbers. You understand by now, after the week, I like the top-down view to give a little bit perspectives and dimension of things. Global trade is made up about 70%, 70%, 2/3 of the global trade are commodities. 40% of containers moving around the world. Out of the 70%, 80% is energy. 20% is metals. So about roughly 50% is energy, and the other one is metals. It's huge. It's the single biggest trade volumes in dollar terms and tons, obviously, are commodities for our. Without those, we have nothing that we are wearing, nothing we're sitting on, nothing that we are eating. And the importance is huge, but it is a physically heavy business, sometimes also dirty, not dirty in thing, it's simply dirty business. You need a lot of heavy equipment, and heavy equipment is hard to manage. It's a very dangerous business also. Metal concentrate belongs from the mines. You take out the metals that are not yet fully refined, and you start to trade into the different refineries and different trading hubs. Very difficult business, very intransparent, because of the physical nature, not because of the wish to do so. It is a dirty business because it is a mixed business, and it requires a lot of effort. People effort, physical effort, analytical effort, logistic effort, and it's often also very dangerous. There are a lot of assets involved, so environmentally it's also challenging. I would like to address this particular thing which you addressed, the most difficult part in the commodity chain, one of the largest, the largest global trade in the global trade in terms of dollar terms, and how you apply new technology to that region, and why it is so important in the Caspian region to address that issue in a different way.
Thank you for the question. Great question. By the way, thank you very much for the explanation. I don't have to explain what metal concentrate is, otherwise it's actually... And it is a dirty business in multiple different dimensions. So just to summarize very quickly what open mineral is. There are producers.
This is your company, sorry.
And the company, and I'm a CEO of Open Mineral. There are producers of the metal concentrate and the consumers. Both of them are very large B2B businesses. Almost always they're located in different countries because it's a very global trade, right? The role of intermediary was played for a very long time, for centuries, by the traders, the commodity traders who are buying in one place, using the information asymmetry and understanding of the global market and advantages and disadvantages of the different regimes and the price movements at that time, would be selling those commodities. And that was their main model. So we have a team that is coming out of the global trader called Glencore. And we looked at the best practices and how things are running, and we said the world is moving, a lot of things are getting digitized, but nobody's addressing multiple things in the global trade commodity business. And we said, can we take the best practices that exist in the traders today and digitize them and make them more efficient? And that's how we started. So the idea got quite a lot of support. People like the efficiencies. People like the transparency. Of course, the miners and the smelters love the part to come together online and do the business directly. That allows them to capture the margin that used to be captured by the intermediary and divide it among themselves. And because our business is very non-transparent, that margin is actually could be very hefty, right? And on top of that, it's extremely paper-heavy business. So even digitizing a percentage of the documents involved creates a huge advantage, speeds up things, reduces the work that needs to be done by the back office. So the whole industry wants to do it, right? So it's very easy to sign people up. The practical aspects, of course, becomes very, very difficult. So we digitize, for example, all the fields that go into the normal contract. We build up special negotiation tools which work exactly how it works in today's life, right? So you can do it online 24/7, you can do negotiation, you can do mobile. We are really an IT company. It becomes an IT platform, right? And of course, we have the commercial people in each area to continue talking to the people because it's a physical B2B business, so you have to have personal relationships so people can ask questions, can raise up any of the concerns. But what we were discovering, it's very important to be able to digitize the whole supply chain or there is no value created. So you need to have the shipping companies which are being involved. You need to have the trade financing companies in order to be able to close the whole loop from the producer to the supplier. And that's the ecosystem that we have built up. And now we are engaging a lot of the supply chain partners in different jurisdictions who provide the quotes for their services as well.
Thank you so much. I take a little step back and reach out a little bit. I don't know how many of you are familiar of the things that we take for granted today. We take for granted the insurance industry. We take for granted the shipping industry. We take for granted credit and debt. We take for granted future exchanges and so on. Every single term I mentioned originates in the commodity industry. The commodity industry is the oldest. It goes back thousands of years. The first financial contracts have been futures and forwards, that the farmers have been guaranteed a price, an uptake price, when the harvest is due, even though they might fail in the harvests. That goes back to the Chinese, to the Middle East, the Phoenician, Egyptians, and so on. The very term of insuring something derives from shipping. To take a risk to ship and sail abroad was a huge risk. It derives from Venetians, then from London, and so on, being traded insurance in the coffee and tea houses, which emerged into clubs. The clubs which have a mutual guaranteed insurance. If something happens to one of the partners, they mutually grant a recompensation. All the things we take for granted comes from the commodity industry. We tend to forget that. How does it practically work? Again, 70% of global trade are commodities. Huge dollar terms, trillions of dollars. Extremely high risk. A physical risk, but also a human risk. Environmental risk, operational risk, a financial risk. It is the riskiest business that are out there. There's nothing more riskier than the commodity trade. Despite all these risks, we have established means and ways how to ensure all that rather a limited amount actually gets billed and a lot gets effectively transacted. And it's remarkable. We tend to forget that. How does it practically work? So, I am a seller of, let's say, 1 million barrels of oil. I put this oil on a boat or on a pipeline or a train or a truck. Mostly it is a boat that transports oil from A to B. It can be iron ore, it can be grains, it can be rice. It doesn't matter. It's always the same process. You put it on a ship, on a transportation vehicle. Somebody transports it and releases it at the seller's point. What are the very way of doing requires 3 fundamental contracts which have been in place for about 200 years, the past 200 years, starting from London, have been standardized. It's called the commercial contract. The one who takes the loads on his vehicle, whether it's a ship or a truck, is then responsible for the transport. He's called the captain. The captain will issue a bill of lading. He testifies, yes, I loaded this volume and this quantity and this quality of product on my vehicle. Well, how can you believe that he is true what he is saying for not defrauding the buyer? He has to have an audit. It's called a certificate that is being issued by an independent auditor, usually called SGS, Société Surveillance, issued that, yes, it is true, he has loaded this quantity, this quality to this destination. It's called a certificate of authentication. Then the third one is, how can you assure me that when the ship goes down, I'm not going to lose all my purchase? Well, you need an insurance contract, which is called the insurance certificate. So the captain has a bill of lading, an insurance certificate, the certificate of authenticity of the product, and then the bank will release the funds from the buyer to the seller. Now, these 3 fundamental, and then there are other documents too, but these are the fundamental documents. I would like to open this because Philip is engaged in this very center of the contractual notes. New technology enables to standardize all that and facilitate this documentation and put it on a more standardized way. And blockchain, everybody talks blockchain, but blockchain doesn't work if we don't have an agreement in order to release the ways of processes which we have in place for 200 years. Please, Philip.
Thank you, Caspar. Excuse me. Thank you for the invitation. Great to be here. I'm a lawyer working in commodities trade finance and in new digital trade technologies at a law firm called HFW. We specialize in the global supply cycle. So as Caspar said, we try to knit together our expertise in shipping, insurance, trade, finance, logistics, and the like to cover the whole supply cycle. For 20 years, I've been working in this industry, and for the first 15 years, certainly 13 years, I was working almost exclusively in deals financing commodity flow from the CIS, working for the EBRD, the IFC, the World Bank, for large traders, for small, medium-sized traders, transporting commodities in and around the CIS or from the CIS, and working on finance deals to structure this, working on bankable deals, and deals that were done, deals that were successful, deals that brought all the pieces of the jigsaw together and had the shipping, the logistics, the finance, the credit, where all the risk was probably analyzed and mitigated and taken and assumed. And these, I think the Caspian region was the heart of structured trade, commodities trade finance in the 1990s and in the first decade of this century.
1890.
Well, certainly.
Deutsche Bank.
Yeah, I wasn't around then, but sure. I think now, obviously, since the onset of the global financial crisis, we've had a lot that's tried to weigh us down. But now I see this as an opportunity to refresh and for the digital aspects, the new digital trade technologies to actually revitalize the area, the industry, and work towards bringing new successful commodities trade, as was done for hundreds of years, but in my time, for the 20 years of my career. I don't think the law is going to impede what we do, other than, as Matthew said earlier, the law is going to be concerned about how people behave on a blockchain, what they do. So the law is going to be concerned about no breach of sanctions, anti-money laundering, terrorist financing, know your client, that type of basic fundamental norms that the law will want to see any system cover, and they will stamp down hard, any regulator in any country will stamp down hard on any activity that they think transgresses these basic norms out on the analog circuit, if you like. And as Matthew said, it's going to be a reactive approach by the industries. They're not going to regulate for us. They're not going to tell us what you can and can't do proactively. They're going to respond to an ICO, and they're going to say, hey, that should be registered or exempt under SEC guidelines. They're not going to say to us, this is the protocol, these are the arrangements, this is how you should behave. So it's up to us and people like us to do that. The other thing I think, as well as looking after consumers and making sure that any investment is properly advertised and is done in accordance with the prospectus. The other thing I would say about the law is that the law in English law, I mean, I worked in the civil code countries for 20-odd years, and I understand some of the pledge law and the civil code systems.
Maybe sorry that I interrupt, maybe a very brief sentence, civil and common law.
Yeah, I mean, the common law essentially is based upon precedent, so it's what happens over a number of years, and courts can actually issue guidelines that sets a precedent for that particular set of circumstances, and then you have to distinguish your case from that precedent if you want a different judgment or a different result. And the law isn't really codified or written down. It is in some respects. There are statutes, there are acts, but a lot of the law is built around case law, whereas in the civil code jurisdictions, you work more over on defined laws, pledge laws, mortgage laws, civil code systems. And in common law, it tends to be you can do anything unless you're prohibited from doing it by precedent, whereas in the civil law systems, from my experience, it's more that what you can do is what's written down. So it's kind of differentiation in approach. I think the law, we can't expect the law actually to help us much here. It's going to be looking at protecting the types of issues we talked about earlier. It's not going to be promoting how we should do our business in the Caspian region, how we should facilitate, supplement, augment trade. What also is the case is that people look at the law and analyze a smart contract in accordance with existing contractual law. Well, contractual law, from an English law perspective, has grown up from case law over 600, 700, 800 years, and it's wrong, in my view, to say, okay, how does that apply to the new smart contracts? Because, of course, the last 500 years, these smart contracts weren't envisaged. So none of the laws actually are relevant, in my opinion, to blockchain, to DLT, to smart contracts, the Internet of Things, to digital currencies. However, for the moment, for the time being, and until the laws catch up, it's all we've got. So you have to pay respect to them. You have to look at them and think, is there anything that I'm doing that doesn't match with what the law says? And again, I think it'll be around those areas we talked about. Smart contracts I could talk a lot about, and essentially, you've got to look about contracting on a blockchain if we're going to do this business digitally. And there's a lot of issues around that may not fit with the existing legal analysis of what a contract is, how it works, the remedies it should give you. And there's a lot that's going to have to be worked on before where we can rely upon a smart contract, in my view. But I can talk more about that later.
Thank you. So there is no one-fits-all solution. we don't know exactly yet how it will look like. But so that kind of legal, let's say, or regulatory approach reminds me a lot of the common law approach. So you let the market take care of itself, let accidents to happen, and then see, let's not make them happen again, instead of preemptively regulating something which we don't know how the future will evolve.
Yeah, I mean, I'm not a regulatory lawyer. Matthew can speak more to it. But for the last 10 years after the financial crisis, we've seen an avalanche of regulation that has impeded business, in my view. Some of it's been relevant, some of it's been necessary, but it's impeded business. And banks in commodities trade finance arena have retracted largely because they're scared, rightly so, of sanctions, of KYC, of terrorist financing, of dealing with producers, suppliers in emerging markets that they don't know or they can't validate, or it takes too long, too much energy to validate. So we want to help them come back in. And if the blockchain systems can actually validate that data and help them come back in, and it help the banks show the regulators that they're doing business in the right way, then I think we have an opportunity to bring them back in and to actually promote trade and to promote the financing of trade.
I would like to open up a quick kind of anecdote with Matthew concerning the financial regulation in the United States. And there have been three main steps of escalation in terms of complexity over the past now almost 100 years, starting with the SEC in 1933. I think the SEC, Securities and Exchange Commission, the formation that happened after the big depression, the 1929, where a lot of people have been defrauded. Unemployment rate reached almost 50% in the United States. It was a huge disaster. The SEC was installed. Then the second kind of big node was around the big tech bubble, the Sarbanes-Oxley law. Of course, there were different steps within security regulations. And the next one, 2009, the Frank-Dodd Act. And just describe how many pages each one was necessary in order to describe what they would like to regulate.
Well, I'm not sure I've ever counted the pages, but I think it's fair to say that the more recent in time, the thicker the volumes. Although it's also true, as Philip says, that in the U.S. regulatory system, the text of the law is just a starting point. And so much of the actual rules of the road for businesses is developed through individual actions by regulators, by informal guidance by regulators, and even by simple conversations between industry and regulators. And that's why I think it's exactly correct that regulation in this space is likely to be reactive. First of all, the technology hasn't come into focus yet, right? Going back to the point that you were making before, Caspar, someone is going to have an opportunity to really make a killing in some of these spaces that we're talking about. It is not necessarily, and probably not even probably, the first movers. There is a first mover advantage, but ultimately it's whoever it is that gains traction in developing a platform that can be widely adopted that's going to be the winner, right? At the end of the day, to take a different sort of technological example, and maybe I'm not the right person because I don't use either of these things, but I don't know that there's a tremendous difference between, for example, Facebook and MySpace, which existed before it, right? And MySpace was a first mover and had tremendous popularity for a moment, and now it doesn't exist at all. And Facebook is dominant, right? And so regulation in that space, which a lot of it is about consumer protection and things like that, is following on the adoption of technology. And I think we're going to see that increasingly in the fintech space. The other thing that makes fintech difficult from a regulatory perspective is a lot of times it describes a way of doing things more than the thing itself. And that means that it's very difficult to set prospective rules on how businesses should behave. So to take the example of an ICO that we were talking about before, right? An initial coin offering. What is an ICO? Well, it really depends what you're doing. There are a lot of different kinds.
Maybe what means, we had this before, an ICO for the ones who don't know means what?
Initial coin offering.
And that
right?
means?
So it's an offering of some sort of cryptocurrency token, something like that, to the investing public. But what is behind the coin depends quite a bit. So it can be something that has supposed intrinsic value, right? So I can decide to issue, Matthew coin, and there's nothing behind it. You should just buy it, and we should just use it as a currency, right? I can do that and have an ICO of Matthew coins. I can also have an ICO that's asset-backed, right? That's actually tied to something that has value in the real world. Like I was discussing with someone yesterday, that in Dubai, they are moving towards doing that with the land registry there and allowing individuals to, through the mechanism of an ICO, invest in real estate, right? That feels very different from the first scenario, right? The second one feels a lot more like what we would in the States call a securitization, right? And that is something that fits much more comfortably within existing regulatory frameworks, just using new technology, whereas the first thing feels totally new and, depending upon the trust behind the issuing authority, raises a lot more questions because it feels, frankly, that the potential for fraud is much, much higher, right? But they're both called ICOs, right? And so until there's clarity around the technology and the terminology and the way that we're doing these things, it's going to be very difficult for regulation to catch up, and it's going to be, as Philip says, reactive.
But I read about, I guess, about 200 white papers the last year only. Mostly have had to do around, coin offerings, something like this. And what just surprised me is that very few could portray a clarity of the value chain, what this coin, the value that the coins derive from. I mean, there has to be more. They do not give any sort of value that they are offering, besides a hope that the coin which they're going to issue will increase in value. But there's no claim to any title or anything. And my question is this a way to go? It seems to me there's like two legal realities. Well, if I sell something, there must be some sort of value attached. Okay, there must be the value of hope. But the value of hope, I think you can go to, you can go to a church and hope, that they live longer and make your prayers. And then good luck, and then go back to the bar. But if in this world, is this something that can continue? Because as long as you sell it to another gullible believer, or this is like a guru-esque situation, but in the real commercial world, real investors, institutional monies, and so on, how can you square this hope scenario with the real-world economics of money, money management?
I'd be very interested to hear from the people who actually participate in the markets. But from a regulatory perspective, you're exactly right. A lot of these offerings feel like, it's just monopoly money, right? It's just fake. And somehow, because it's backed by the technology of the day, we can place hope in it. It's going to have value. It's going to increase in value without any basis for that. And that causes tremendous concern for regulators. The currencies, the digital currencies that tend to be successful have become successful, in my view, for one of two reasons. One is because simply they've gained widespread adoption, and by virtue of widespread adoption, they actually have some use as currency. And that's something like Bitcoin, for example, or Bitcoin Cash. And the other example is where the technology doesn't exist for its own sake, but actually facilitates certain kinds of transactions, eliminates frictions, and creates efficiencies that don't exist in the real world. So for, example of this is XRP, or the Ripple currency, right? That facilitates financial institution transactions, correspondent transactions, without a lot of the transaction costs, both in terms of money and time, of cross-border transactions. That's a place where real value is added by the technology. But the ones that are just, the Matthew coin, that's not different from monopoly money.
The Matthew coin may be attached to a lot of victories in legal lawsuits, so may share the proceeds of those.
That would be tied to something.
Here we go. The Matthew coin, yes, Philip.
I think the key here, as you've both said, is if you buy into a company through an IPO, an initial public offering, you're buying shares in the company, and your investment will be linked to the performance of the company. The danger with some ICOs at the moment is you're buying a currency which may not be linked and necessarily isn't linked with how well the business does, and you're not getting shares in the company, you're not getting the underlying asset, you're getting a currency which may accrue in value for other reasons because of people want to buy into it because they think it's going to go up like Bitcoin, but it's disconnected with the actual value of the business. So I think the key for ICOs is to see the token, the digital coin, actually linked, become more of a quasi-equity investment into the business so that the holder knows that it's getting something tangible, the supply of oil underlying the business or whatever. I think that's the key to it. And until that happens, overall, you're going to see people not really wanting to buy into ICOs, and you're going to see regulators wanting to shut them down, essentially.
So this leads me to ICO. You live in the cradle of the ICO's Zug. Zug is like bustling. I mean, I have friends from KPMG and so on that have to, kind of audit these offerings and so on. Every day, Andre, for example, the head of business development, he calls me up. It's incredible. It's absolutely crazy. I don't know. He doesn't sleep anymore. He gets the offerings from Japan, from China. Everything runs over Zug. I'm a very old-fashioned thinker. Maybe a primitive thinker. If I have a company, I need financing. I have 4 ways to do so. Either I have my personal money, which I saved and I turned into equity. I can borrow it from somebody in different forms, which are obligations to pay back. I can offer him a piece of my company if he deems that has some sort of value, with the risk that he will lose it all because I will not be successful. Or I can receive a gift from somebody. These are like the 4 forms that I know about that you can raise money for the financing. Now here comes a different form. You give me money and I don't give you absolutely zero. And that's what I have seen in Zug again and again and again. You live in the cradle. Am I wrong? And how do you approach it? Because I assume also you with your company are considering or have done so, I'm not quite sure, an ICO in order to raise the capital to deploy all the technologies that you intended to.
Yeah, we advised on one that didn't go ahead. But yeah, I mean, the key is you may have a certain amount of sophisticated investors that are prepared to lend into an ICO, invest into an ICO in return for not getting loan, principal or interest, but in return for the rise of the currency, if they believe the currency may accrue.
It's the hope.
Yeah, but that's going to be very, very, well, it could be a number of investors. You could have consumers. The craze for Bitcoin before Christmas was probably an example of that. People don't really understand what it is, but they see it shooting up in value, so they buy into it. But surely for an ICO to actually raise money for the business, it's the investment, the return has got to be linked to the performance of the business. It can't be a hope on the value of the currency. It's got to be either debt, which is balanced against the success of the company, or shares or equity, or something in the middle.
Coming back to a security sort of issue.
Yeah, I mean, otherwise you're not going to get many people who want to actually invest in ICOs and give real money, if I can call it that, in return for a digital currency which has uncertain value, even though that value, as in the case of Bitcoin, may turn out to be sky high from time to time.
Boris, you're squeezed in between and you're smiling and said, these guys have no clue, because what the hell are they talking about? I make a lot of money. I offer an ICO, I get the money, I don't have no obligation to pay back or give any equity up to that. Have you done an ICO? Are you considering to do so, and how?
Well, first of all, I'm squeezed between 2 lawyers, so it's always great, right, to be in between, because they love participating. I think the previous question actually was addressed to me, Philip. But the fascinating part, no, we have not done ICO for a very simple reason. We are B2B platform, right? And
what is a B2B? Breakfast to breakfast?
Business,
oh, business to business.
So we are working with the gigantic mines and the smelters. So the ecosystem is very large in terms of the value of the movement of the commodities, but it's not based for the consumer, right? And so unless you're addressing a big market, what exactly does your coin represent, right? And of course, we do share the sentiment, and everybody understands, and that's what the articles and every single major news publication have pointed out, right? A lot of the ICOs, there are basically 3 types. One of them could be based to the equity. That's very similar to the IPO type of thing, right? There could be asset-backed ICO, where, for example, you issue the gold coin, which is supported by the ounce of the gold, physical gold somewhere or real estate in Dubai. So that's the second one. And the third one is utilization type of coin, and that's based just on the coin will be used a lot in the ecosystem. So there is no question, guys. Everybody understands that, of course, first and second are much more real. Third one, 99% of the companies will not actually have any value, right? So let me actually turn it around to make it more interesting. Everybody understands, and everybody continues to do that, right? Fear and greed, or it's been going on for actually quite a long time. Nobody knows when it will finish up. We all understand there is a bubble, but nobody knows. Is the bubble going to be multiplied by another factor of 5? Is it going to be divided by a factor of 5? And people continue to put a significant amount of money, right? And then you're actually can turn it around, and what is happening? And what is happening is the valuation of the cryptocurrency reflects absolute distrust in the government, distrust in the regulations. People want to walk away. And of course, if I were an entrepreneur who was capable of raising an ICO, right, it's a great opportunity. You raise the capital, right, and you give up very little in return. So as an entrepreneur, definitely worth trying to do something like that when the hype is so high and you can do it. But in the reality, guys, this is what the government has created. They dropped the interest rate almost to zero. They created an incredible liquidity. So where do people put money? So that's why all those risky assets that has a future potential, right? And people are playing for the hope, potential, hype, and people want to participate. So the valuation of cryptocurrency is inversely correlated with the trust of the government. And I can tell you it's actually fascinating, guys. Right here, if you walk, there is a crypto headquarters. There is a company which is truly the thought leader in the blockchain consensus. That's the one that governor has mentioned.
But this one is not in the crypto headquarters, though.
It's a blockchain type of...
Yeah, but it's not in the crypto headquarters consensus.
No. It's
Two
they're
separate.
right next
Please,
to each
I
other.
want to make this very sure because crypto headquarters is a species you do not want to mention.
Correct. So it's a very different world, right? And then you walk to the other side of promenade, right? And there are a lot of people, the forum members, who are coming and have the general conversation talks, right? And you show up there and you run the spectrum is huge, right? There are companies there. It's complete BS. There is no question. It makes no sense whatsoever. 30-second conversation. They cannot even formulate what they do, right? And then there are some very interesting opportunities. So it's just
so
very,
you
very
are
different world.
pro-regulation in order to install the trust in the market, in order that the blockchain new technology will have a future.
I believe that the market, similarly to the common English law, will evolve by itself. So let the market forces regulate how things will develop, because nobody has the crystal ball. The reason the regulators will be reactionary, because it's impossible to say how exactly it will develop. So let the market run its forces.
Well, I mean,
some people will lose money, obviously, but you know, this is the life.
So let me ask you a question then. How do you see that, as someone who's in commerce, playing out, where the value to the consumer of cryptocurrencies is that it is divorced from governments, but inevitably there is going to be more and standardized regulation, right? Is that going to be counterproductive? Because the two things are in tension, right?
It will become more real, guys, right? So you're not going to have the ideas that make no sense, right? Raising $30–50 million.
Why doesn't it make sense?
There are plenty of the ICOs that, you know, you obviously read the white paper and it's clear that there is no business idea right behind that.
Why should you worry? I mean,
I will not worry, I will not invest.
the investor
but it's my
is
right,
happy.
right?
He
It's
buys my coins. I
my,
make him happy.
my consumer right to invest in what I want to, right? So the question is whether the regulation, by the fact that the regulation will increase, of course, we all understand that's where it will be working. It actually will help to evolve the system into something a bit more tangible, right? With less of the clear fraud cases, right? And I think it actually is the right way, so it will develop over time.
You don't think the demand will drop away from the people who are invested in this precisely because it's not centralized from a government?
They will have no choice but to adjust. Even the Bitcoin anarchists, the some that you see, there are actually a couple of the extremely interesting guys here who have been investing at Bitcoin at $1 value. They all understand it's coming, right? And what they're actually worried, it's if you talk to them, they are concerned to make sure that the government doesn't go too hardcore and half of the industry doesn't end up in jail, because obviously as the regulation increases, a lot of the practices that were common could be looked very unfavorably upon.
So when we look at the brain scan in early childhood development, which we had up here, we saw that a child which is stimulated, we don't have it right here, but a child which is stimulated early on in many different ways has a more prospering future. And one that is not stimulated is being stunted down the way. So the first 1,000 days. Another thing is a child that has the freedom to play and build the sand castles and destroy it again and build a better one, and this with colleagues, has a better prospering future in being creative and finding solutions. Philip, I would like to address this analogy a little bit called to the sandbox rules that a lot of governments, especially I think in the civil law-based societies, try or are applying, including Switzerland. What does a sandbox rule mean, and does it work?
I think just touching on the previous conversation, the analogy is a fantastic one, because I think in this whole debate on the digital technologies and blockchain and digital currencies and the role of banks and governments and the trusted intermediaries that we've dealt with for hundreds of years is fascinating. And governments and quasi-governments, and what are they going to do? What role are they going to play? And I think in the onset of Bitcoin and blockchain, you had banks and governments not even worrying about this at all. And in the last 2 or 3 years, you've seen a flood of position papers, white papers, speeches coming out from the regulators, from the banks, from the governors of the central banks saying, hey, actually, we believe that there's something here, but we want to play a role in this. And if you've seen on the digital currencies, I'll take England, for example, the Bank of England issued a paper back at the end of 2016 where they said they believe digital currencies have a role to play and they can see trade being carried out by businesses in the years to come with various different digital currencies being employed. So traders and banks having their own portfolio of Bitcoin or Ripple or Ether or whatever, and using whichever currency that is relevant for that particular deal. Now, it's fascinating that the bank said actually, however, because of the lack of trust in a digital currency, because of what we've seen around the dark web and etc., we've got to play a role in here to bring trust back into this system. And we actually suggest we should have a digital currency called a CBDC, a central bank digital currency, which is, of course, the exact opposite of why a digital currency was set up in the first place. But it shows you they're taking it seriously, they believe in it, they think there's a future, and this may be the way where it can be scalable by some form of trusted intermediary coming back, even though it's anathema to the actual idea. What I would say is the other thing, for trade to happen and for value to be transferred at the moment, you need a bank account. And Caspar, as you pointed out in your papers, about 2.5 billion people in the world don't have a bank account, they're unbanked. You need to pay transfer fees, transactional costs. You need to pay a cost for having your account. And when you do deals internationally, it can take 4 or 5 days to clear. I mean, what's going on? People want to see real-time settlement. And if these digital payment systems and digital currencies and blockchains can actually introduce real-time payment, real-time settlement, without having the banks, without having the funds going through the central banks and clogging it up, costing money, it's great. But will they work on a scalable basis? Anyone who tried to buy Bitcoin before December, before Christmas, will have seen that the transaction costs, I think you pointed out in your papers, Caspar, went up about £24,000%. And instead of the whole thing about Bitcoin and blockchain being small transaction costs, went bust because the transaction costs were so high and the time taken to validate transactions was so high. I don't know whether Bitcoin is scalable, and I'm sure they're addressing that. So yeah, you've got to look back and you've got to have your institutions, your technology companies that work together in a collaborative way, and this region can be the advent for that actually addresses all of the issues, but makes the banks do what they need to do in order to be more trusted, so we don't go back to the pre-financial crisis where the banks were too big to fail. And we need payment systems that flow without having to spend all the money, without having to have a bank account, without having the delays and the currency exchange fees that are applicable to banking transactions.
Well, thank you. I thank you to actually have read my notes. I feel privileged because actually they have been proofread by the relevant experts. So it was not my personal opinions based on so I did let them proofread. They're not complete. There may be also not. It's a little bit a hodgepodge of thoughts, but these points tickle your mind a little bit to think about, especially in the Bitcoin thing. And we saw also the different views in our debate, which we did 2 days ago, which was extremely aggressive, actually. to the point of almost physical action between the panelists. It did not happen. I hope it will not happen in the future. But it was animated. There was a common thread which I see through all the days that we have to all the panels, the technology, this, different sectors, different actors. But what I try to focus is to assemble teams of individuals who have an authority in what they are talking about, who have a track record in their respective fields and have their monies or careers at risk. And all of them, there is one underlying red thread that connects all of it, no matter what sector, no matter what stage they are engaged, no matter from the academic side, from the industrial financial side, is they are all pro finding a common framework and regulation in order to prosper. And another point which you mentioned several times ahead is the trust. Because if you do not trust the system, the technology, the transactability of issues, whether in healthcare, of the data collection, analysis and distribution, things will not work. Things do not work. You can have the best technologies, you have the most money and so on. It will not work if there isn't trust. There will be no transaction. And the trust can only be built by, let's say, even if it's a wide span, a very wide, with an ample room of actionability and entrepreneurial activity, of framework, internationally, it will be extremely difficult to build that trust. I would like to open up the floor to some questions. Please, your name, and the question ends with a question mark, as always here.
System. I'm
Which
professor
university, sorry?
University Rey Juan Carlos, Madrid, Spain.
Madrid.
Javier Brana, my name, professor of financial system. My question is, it looks like there is a kind of, or it would be a war among the different cryptocurrencies or digital currencies or whatever. But once the war is over and there is a new currency, digital or whatever, what do you think will be the role of the fiat currencies, or what do you think will be the role, the real role of the central banks and the government-driven fiat currency for the payment system in the coming future? Thank you.
I think if we had a clue, we would not be sitting here. So it's extremely hard to say, right, how exactly it will develop. The central banks have all the authorities, money, the governments behind them, right? So they will adjust, and if the idea makes sense, depending on how aggressive your position is towards central banks, they will either collaborate or hijack the concept and put the government forces behind that, right? So in no likelihood the central banks will stay valid for a very long time.
You believe in a centralization of some sort of banking regulation and monetary policies?
I just realized how much resources they have behind them, right? And it's a credible threat to the system and to the governments. And so they will do everything possible. Again, it's irrational behavior, right? Trying to overtake. And if you talk to some of the interesting guys here, they actually feel certain pressure from the government agencies at this point, just behind the radars. And so the pressure could easily be escalated. They all understand that. They're all smart guys, right? And so in the government that can agree on the principles would be able to change the system without any doubt. So they will control it.
Governments will continue to, please, yes.
No, I mean, far be it from me to talk about this because this is far outside my specialty, but it seems to me that there are aspects of fiat currency that just cannot be duplicated in cryptocurrencies that are not issued by governments, right? One is that these currencies are not backed by the full faith and credit of sovereign governments, and that's a significant feature of fiat currencies, and that's why certain of them have become the gold standard for international transactions. Two is there's no central authority like a central bank that can engage in monetary policy and things like that to address larger macro issues through currency, right? And so while the lack of a central authority, the lack of centralization is an attractive feature of these currencies, there are certain attractive features of fiat currencies that can't be readily replicated unless you're talking about, you know, a currency issued by the Bank of England or something like that.
It's a fascinating question. I mean, if you go back 1,000 years or so, there was no currency. It was, you know, people were exchanging value through goats and sheep and the like. And then obviously, not everyone had a goat or sheep to exchange. So people devised money to exchange as a universal measure. But that system clearly hasn't really worked because the banks are now, you know, distrusted to a large extent. But the populist wave, people are disintermediated. You don't have bank accounts. If you have a bank account, you pay high fees. Transaction costs are high. It takes a long time for money to clear. The banks make a lot of money out of consumers, and people do not want this essentially, which is why they're trying to devise these digital systems which are real-time payment. You can see it straight away. There's no transaction costs. It's validated, and there's no exchange rates that you need to worry about. But we've seen a little bit that doesn't quite work with Bitcoin in the way we thought it might do, with the way it went up and spiked before Christmas. But I think it's going to be hard to disintermediate cash and money, but you see it happening in China, where a lot of the cash is now digital, whereas in somewhere like Japan, you know, it's a very cash-heavy society. So maybe different cultures and different societies will move ahead at different streams. But I think digital currencies can't be disinvented. They're here to stay, and there's so many people who actually want this payment system. It's not just the currency, it's the payment system and how it works. Real-time payment with no transactional costs or limited transactional costs. Hardly any unfavorable exchange rates, and without having to have a bank account, you just need an internet connection. They're here to stay, for sure. It'd be hard to regulate them, I think impossible to regulate them, and I see this as a kind of a war between the banks and the central banks and governments wanting to remain relevant. How do they do that? Well, they do that by, as I said earlier, they issue position papers and they say, hey, let's play a role here. Let's back these through a central bank. Let's give it the central bank gold standard, and we're here so that all of you can come in and, you know, there's no disintermediation. We're here to administer all of this, and we'll be a dispute resolution forum and the like, and we'll support it. But that's moving back to what we had before. How does that move the things along? And people deliberately devise these systems to take the banks out, so they're not going to invite them back in very quickly. So it's kind of a war, I think.
It's a war, and it's a, yeah, Boris?
I actually want to follow up, Philip, I fully agree. Two things. First of all, if we are referring to anything with scalability, you got to remember this is a very young technology, right? So it will continue to develop. So all of the things, for example, the cost of the transaction or scalability that you mentioned, there are a lot of new projects which are addressing that. Not to go into the technical details, but besides the public ledger, they have the private ones where you can actually run with the transaction extremely fast. So you can almost have instantaneous settlement, right? Now, I'm actually much more middle ground, but obviously in the company of the two lawyers and from the regulation side, I'll play the provocateur role. Yes, the currency, the fiat currency that you have in your pockets are not backed by absolutely anything, but the trust, you know, in the central banks, which we know what they do, they just print money, right? Quantitative easing is absolutely nothing but printing money and giving that to the financial institutions who now can lever up and become as rich as possible at the expense of absolutely everybody else, right? And then the whole population will pay the debts which are accumulated by the financial institutions. Okay. You can take the coin and do the asset back. For example, you mentioned thousands of years ago. I'm taking an example. For thousands of years, what was the currency of exchange? Gold, right? So you can take a digital coin and back it by the gold, right? So it becomes a trustable system that has existed for thousands of years, and you can exchange there. And I'll tell you personally, 90% of my purchases are online at this point, outside of food, right? Yeah. That's it.
Okay, I would like to take the opportunity to have Khairat, right? Was from Kazakhstan here from the AIFC as we talk about the region, please.
One more question is there are more than half panelists are lawyers. Again, concerning this token sales and regulatory, etc. So I have read that there is an opinion of US regulators that in the nearest future, almost all utility tokens will be considered as a security too. So utility token is, so before this comments, it was like Howey test. If you don't pass Howey test, it's a security token. The others, there are a lot of types, are utility tokens. Utility tokens can represent some, like maybe backed with something, with a commodity or anything else, or can be used like utility or internal money for like payments inside app or anything else. There are a lot of variations. Now, so I'm hearing that SEC is going to consider almost all utility tokens as a security. The main reason is that it's tradable and very much speculative, etc. So, how do you think, in terms of like legal view, is it fair, especially when we compare it like with commodities, for example, gold or I don't know anything. So it's tradable too. Maybe less volatile, and in different, like with different liquidity, with different behavior of investors or I don't know customers.
What is the question?
Question is, do you think it's fair, like to consider these utilities as a security?
Okay,
Thank you.
That's the SEC question.
That's a good question. You know the expression, to a hammer, everything looks like a nail, right? Meaning that if you have one tool, which is to bang something down, then that's what you do. So to the SEC, everything looks like a security, right? To the commodities regulator in the US, the CFTC, everything looks like a commodity. And so they say these are all commodities and we can regulate them. To the bank regulators, like the Federal Reserve and the Comptroller of the Currency and the FDIC, this all looks like money. And so we're going to regulate it like currency. To the Treasury Department as well. And so that's why at the very beginning I said, in the United States, I can count at least 10 different agencies that say we have at least shared, if not primary, regulatory authority over, specifically I was talking about cryptocurrencies, digital currencies, right? But you can see as we've started to talk about specific examples of these things, that some of them feel like securities, right? When you have an ICO that really is just replicating an equity investment, that feels like a security. When you have an ICO that's backed by a commodity like gold or oil, it feels like a commodity. When you have an ICO that's backed by nothing and it's just meant to be a unit of intrinsic value, that feels like a currency. And that's something that is going to need to be settled out amongst the various constituents in the United States and ultimately internationally. But there is an opportunity, going to what Boris said before, for first movers not only on the industry side, but on the regulatory side as well. And if someone can set clear standards that are adoptable across borders for this technology, and it's a huge opportunity for something like the AIFC, that will attract business. Now, look, you still have to deal with big markets like the United States, and so you're never going to get away from the alphabet soup of regulators in the United States. But there is a huge opportunity for anyone who is willing to be something other than purely reactive, to try and set some of the ground rules, some of the rules of the road for this industry. Because otherwise, you're right, I don't know to say, is it fair is the right question, but it's a problem. And companies are caught where the same thing they're being told is subject to push and pull from multiple different authorities, and that's just in the US, across the world as well. And so as a new technology, and especially as some of these are new companies, how do you deal with that?
Can we say that it's a problem of definitions?
I think that's certainly a big part of it. Right? As I said, a lot of this is describing a way of doing things as opposed to the thing itself. And so you have to be a little bit more specific than simply talking about an ICO or simply talking about a digital currency, because it matters, what it is, what it's backed by, how it's intended to be used, whether it is intended to be an investment to have and hold and trade, or whether it's intended to be a currency that is used to facilitate transactions and other things. These matter to the definition, and the regulation is going to follow that.
Thank you so much. 2 more questions from you and you. First, because you had the hand up first, and then we try to wrap it up. Please.
My name is Sergei Stankevich. I'm from Moscow, from Stolypin Club. First of all, thank you for $1 million idea to establish a cryptocurrency with the name Hope. If I gain something, I'm ready to share.
Well, you know, there's $1 million prize here, so maybe you can match those up.
I don't know if I can cope with it.
My question is to Boris, who between two lawyers looks like the best part of the sandwich. What will, in the new coming world of blockchain, what will be the destiny of big commodity traders like Glencore, Vitol, Dreyfus? Should they be prepared to die or to be converted into some blockchain platforms?
I think it's evolution, not revolution, right? And so it's the companies which are evolving. And for example, Vitol, Trafigura, they have played with the concept. They have tried to put the pilot projects and seeing what could be done, right? Because conceptually, we all understand. In the physical commodity space, you have two huge issues. And that's what Caspar has mentioned at the beginning, supply chain and the trade finance. Very paper-heavy projects. There is always a bit of lack of trust, right, that the blockchain actually solves efficiently, because if you put a smart contract, then you can resolve the trust issues. So the smart companies are evolving and trying the system and trying to understand where can it add actual real value. And we'll understand it's at the beginning of the route, right? So it doesn't solve all the problems. But the premise is great, and you can actually apply it on the real things. For example, I'll give you an example. There are a couple of the shipping platforms right now which have come up. What they do, they have a simple smart contract, nothing sophisticated yet, but it allows you to simplify a lot of paperwork, digitizing bills of ladings, passing the ownership at the ports, for example, of destination, and so on. So we can see that the technology is evolving, and it will be helping. And the smart companies, the same way that the governments will adjust, the same way the certain central banks will adjust, right? They will participate and try to be the part of the future.
Actually, maybe a small comment. I do not want to be biased, but I think they will only grow more important. There's no way they're going to die. I tell you why. A ship is a ship. Iron ore is iron ore. Oil is oil. It has to be loaded. It has to be transported. None of this can be put in 0 and 1 in digital form and transacted through the digital world. This is real. Winter is real. The Volga-Don channel is real. How do you bring out the things from the Caspian Sea in the winter time? What happens if they strike? It's all real. You cannot just abolish the physical world and put it on online. Not yet. Maybe sometimes we can dematerialize ourselves and go, but that's another topic. So I believe they become more important because they are able to invest into the technology, in the newest technologies. They can reach out, they can integrate. The real world, the physical, will stay real. While technology evolves all the time, and it facilitates transaction, it increases transparency, embedded in the real. We tend to forget that these things are real. You sit on a real chair, you eat real food. You don't upload some app and can digitally transfer the vitamins into your stomach and virtually go to the toilet yet. And these things stay real. So I believe the big commodity trades will become even more important because they have the means to invest into new technologies and integrate them in a very sophisticated way. That's a personal opinion. Maybe I'm wrong. One last question we have.
Thank you. Vladimir Lopatin, Corporation of Intellectual Property. I'm a doctor of law, and I know that a very important legal aspect, standard. It's no common law, it's no national law, it's new international law. But my question for all speakers, what you think where Russia in the digital economic and digital energetics today, and example after 5-10 years, where Russia?
I mean, Russia, as I said earlier, for me, Russia and the CIS countries was the heart of commodities trade and trade finance. It helped all the structures develop And the deals worked. I mean, they either did or they didn't, but they didn't fall down legally or through breach of regulation or anything like that. So you have the expertise in this region over the last 20, 30 years, and as Caspar said, over hundreds of years. You have the people with that expertise, and you have the commodities. Sure, oil and gas are declining, but you have the new commodities as well. So with the digital expertise that you have in Russia and the CIS, the two things are hand in hand, and they're there. And for me, Russia and the CIS alongside it has obviously suffered over the last 10 years because of the evolution of the sanctions position, which is necessary to a point, but it's also horrible to a point because it stops a lot of the trade happening. And if these digital technologies can be used to validate data, to show to regulators and the like that people participating in the supply chain have done all the checks and balances and they're not going to be fined or sanctioned by any authorities that they may not have heard of, then this is a way forward for them to come back in, for the banks in particular to come back in and to play a role, whether it's in digital currencies or real-world currencies or not. But you have the expertise, you have the technology skills, and you have the commodities. So why wouldn't you play a role? This is an opportunity to bring you back in to get over that sanctions hurdle. And I think you do that by showing people on the blockchains that this is the information, this is the data, these are the steps, the data, the certificate of origin, the quality certificate, the control certificate, the shipping, the customs authorities, the tariff codes. They've gone through these steps on the blockchain. They've been validated by everyone. So regulators leave it alone. This is fair. And the transactions work and therefore bring the finances back in and the banks can more readily play into that field than is the case at the moment where they're scared to get involved again because they don't know who they're dealing with and they don't know how to validate this.
Thank you so much, Philip. So what will make, and a question to the panel, I would like that each one of you has a final statement or a comment about that. What will make and how will fintech prosper? There is a battle of laws, commercial and civil. There is a battle between free market and regulation, a fight of who will become the legal market leader, without which nothing will move substantially and sustainably, be it globally or in the Caspian region. Digital technology will only prosper if we formulate a framework of trust to transact safely and effectively. Please, Matthew.
What was the question?
The question was, what will make and how will fintech prosper?
As Boris said, this is a lot of the things that we're talking about are new technologies, and it's going to be interesting to see how they develop and how widely they are adopted. But it's clear that they're here to stay, and it's here. I think you're correct that the biggest players in these industries are only going to get more important, both for the reasons that you said, because they're the physical realities, but also because they're the ones that are going to have the resources to be able to adopt these technologies to their highest and best uses. And I think they'll have to be the leaders in this space, and the regulation will follow the use case. But this technology it's here to stay, and it's going to facilitate both on the contracting side and on the payment side, and in other spaces as well. All of the business that all of us do, whether it's as simple as sending $5 out of my paycheck back to my family in another country, or whether it's facilitating multi-million-dollar B2B transactions.
Thank you, Matthew. Boris.
I fully agree with Matthew, and it is all about the dialogue and building that up. And one thing I want to mention, just because obviously coming from the CIS space, I was born in the CIS, and you see a lot of potential, right? Human potential, the quality of people. I work for Glencore as the CFO of the ground of the large mining company there. Tremendous potential, right? And the question is always, I always ask, why is it not fully exploited, right? And right now we are moving the global commodities on a global basis, right? And so we are dealing a lot with the Latin America, with Australia, with Asia in particular, China. And you can actually clearly see that everybody has issues, and everybody believes that they have bigger issues than somebody else, which is very, very funny. But in reality, every single one of those countries has very similar type of the issues. And I think the digital world allows to jump and start something fresh. And that's what Philip said. You don't actually have to carry absolutely everything that has been done over 100 years, and we all fully understand some of the regulations are contradictory. It's very tough to fulfill them, right? This is an opportunity to have the fresh start and build up a brand new ecosystem. I think that should be utilized fully, and I do think that the idea that Kazakhstan right now is implementing, that Belarus has done on the cryptos, it makes a lot of, it's steps in the right directions to capture the future global digital market.
Thank you, Boris. Philip, please do not agree with the other two.
Well, look, I think the digital trade technologies are here to stay. They were invented because of the advent in technology, but they were also invented to correct a failing in the previous system, the banking system, which has largely met a lot of distrust recently. So it's here to stay. It's not going to go away. There may be aspects of it that will fail. There may be participants that will fail. There may be bits that will actually be more successful than others. There may be companies that are more successful than others, but I don't actually think it's necessarily going to be a one where a particular company or companies will dominate, because the whole nature of these digital trade technologies, the whole nature of DLT and blockchain systems and digital currencies are that these aren't owned by anyone, by any one company, by any private company taking control. The whole utopian philosophy behind it, it's centralized, it's owned by all of us, it's common ownership. And this is the way it works. And you can't have it, and no one's going to buy into it if it's monopolized by a trader or a banker or a central bank. It's not going to happen that way. People won't like it. However, you have to balance that for it to be scalable and for the youth to use it going forward and for people to use it in businesses. It has to be not understood necessarily, because the internet's not understood, but it's used. But it has to be trusted. So people have to see how will it go forward. They have to see success stories. They have to see big use cases where it's worked. They have to know how it's worked, why it's worked, what hasn't worked. The information about the pilot schemes has to come out more. But it's something that's going to be shared. It's not something that's going to be dominated by any one or two industries or regions. I think, as I said, to finish off, this region in particular, Caspian Region, advented, supplemented with support from sort of London and Switzerland, if I can say that, will be the people that have to do this. But I think it's kind of a little bit optimistic to suggest that we can devise a set of protocols for a blockchain that will work across all industries, across all jurisdictions. There's thousands of blockchains out there at the moment. They don't all interconnect. How do they interconnect through the side chains? That's going to be an issue, the interconnectivity. Who's going to dominate? No one should dominate, because the whole idea of a blockchain is that it's decentralized and you don't have the dominating central counterparty running this.
Thank you so much. So fintech is here to stay. There is room for everybody to prosper, and trust is key. Thank you so much for this panel. Please applaud the panelists.